Hey, what's up, guys? We have John Chen here. He is a real estate investor and also has his own real estate podcast. So, how's it going, John? How you doing today?
I'm doing well. Thank you for having me.
No problem. Good to have you on. So, yeah, can you tell us a little bit about yourself first, and then we'll go from there?
Sure. So grew up in the DC metro area, went to school with for accounting degree, got my CPA, worked in accounting for a while, and then moved over to consulting. Decided I didn't really enjoy consulting that much, so looked for a different way, and real estate investing is the path that I chose.
Great. Yeah. So, I'm kind of curious about accounting too, because
Mhm.
when I was in college, my first major I wanted to do was computer science. I wasn't able to do that. So then I tried accounting, and
Mhm.
man, that was like way more complicated than like I expected it to be. Like, I mean, I was having a hard time even getting through like the first two classes. I'm just kind of wondering, but I always kind of wanted to do accounting or computer science. But
Mhm.
I guess I'm wondering how hard is I know for people who are good at accounting, like it's not that hard because I've talked to them. But
Mhm.
I mean, I guess it's like what's that path like? Why did you end up leaving that? And what did you like or dislike about it?
Sure. So, I mean, accounting is challenging because basically you're taking a lump sum of money and then you're categorizing it based on like a word problem, essentially, right? Um, and then some of these word problems aren't the most straightforward or easy to deal with. And then you have different financial statements. Like I still have trouble with statement of cash flows, but your income statement's pretty straightforward, tells you how well the company's doing. And then your balance sheet just says, okay, well, how healthy is this company? Is there a lot of debt that needs to get paid, right? So accounting itself is a challenging is very challenging. I mean, I had trouble with it. I'm actually surprised I graduated with an accounting degree, uh, but I didn't enjoy it so much more because it felt like the path that I was going within the accounting world was capping me, and anybody that wanted to get past a certain level, you had to work 60, 70, 80 hours a week as like a normal thing. And I didn't want to do that. I want to be able to see my wife and kids. So I went into consulting, not really knowing that consulting was very similar.
Yeah, so it's definitely like a grind. Did you have like your CPA?
Yeah, I got my CPA. So I graduated in 2008 and then I got my CPA in 2012. I almost did not get my CPA. Um, but I just happened to pass the second test that I took versus failing it. So I decided to go on.
Do they only give you like two chances, or how many chances did they give you?
It was at the time it was you have 18 months, I think, or a year to, I think it was 18 months to pass all four. And you could only sit for one portion of the exam every quarter. So I had passed one, I had failed one, and then I was getting the result. And I said, if I don't pass this, I'm probably not going to keep going. Ended up passing, so I just kept going and then passed the next two.
Yeah. Yeah, I mean thinking about it now, I probably wouldn't be able to do that. I mean, I've even tried like my first one of my first jobs out of college was actually an accounting job, but it was like I mean like entry level, like it was just like posting payments.
Hmm.
But I liked it. It was like posting checks and stuff like that, like entering in
Yeah.
cash or
Hmm.
whatever.
Yeah.
I guess that would be considered accounts receivable or whatever. And I
Hmm.
liked it because it was like really just, kind of easy and I kind of like being able to like keep to myself and not really having to like interact too much with other people. So I was just
Yeah.
on a computer doing my thing. And
Hmm.
then I left that job in I guess I left the job in 2010, but that was right during what you just said. Around that period was the 2008 was the economy
Crash.
collapse
Yep.
or crash or whatever.
Hmm.
And so I could not get another job like that really, like honestly, like ever again. Like up until now I pretty much haven't gone back to that, but I actually liked that job a lot, that entry level accounts receivable job.
Yeah.
But after that I got like temp jobs doing accounting, and but
Okay.
it was low level accounting, but even that was like kind of complicated for me. It was like I just wasn't good at that. Like I'm good at math, but like I'm not
Hmm.
really good at like you said the the word problem stuff, and like a
Yeah.
lot of the words were like throwing me off and confusing me, and like the debits and credits were almost seemed kind of like backwards to me, kind of, all that kind of stuff.
Yeah.
Um, but now that I hear about it more, I'm kind of like, like what you said, you work like 60 to 80 hour weeks, and it's like I just wouldn't really want to do that. It sounds like kind of like a grind.
Yeah, well, I mean, if you're working in the like accounts receivable, it's not so much, but it's when you are at the higher level positions where you're looking over the books overall, then it becomes an issue, right? Because you're really waiting on a lot of things, like you're waiting for AR to get posted or cash to get posted. You're at the end of the month, you're trying to close out your certain accounts you're waiting for billings to go out. Like there's all these different things that have to happen in order for you to close your books and present financials for whoever it is that needs to see them. So yeah, it is very time consuming though.
Yeah, and then I've been told that like um with all the AI and all the new technology, that it's that like part of the reason why I wasn't able to get another job where I was just like posting payments or whatever was
Mhm.
that's all like supposedly that's all like automated now, or it's become automated with like, everything's kind of like credit cards now. And I don't know how true that. I don't know if I'd be able to like go back into that and do like a similar job, but
Well,
like
you
I
still
said,
can
they
because
still have jobs like that.
oh yeah, of course. Because I mean, even if you're using a credit card, right, then you have to identify what expense goes where, right? Some of it's for office, some of it's supplies, right? So then that's something that you can do. AI is automating a lot of things. And another big reason why I got into real estate is because even the job that I was doing, which was accounting automation, which was taking a lot of these things that you're doing manually, like spreadsheets, and then automating them. That's going to go away because then you're going to type it into some AI tool and it's going to spit out whatever it is that you need to do without any of the mistakes that a human would make. But maybe it is disappearing because if it has an idea of what the expense is, right, the AI can just figure it out. I'm sure there's still jobs out there for it if you want to go back to it.
Yeah, yeah. I mean, I was just kind of like wondering why I couldn't get a similar job to that after. And I think part of it was the crash. During
Mm,
that period, like it was just hard to find a job in general. But so
yeah.
where did you go to college?
I went to a little school in Northern Virginia called George Mason University.
Okay, because my dad is from Virginia. He's from Arlington, and he went to
Oh,
UVA. So I don't
okay.
know.
Yep.
I don't know if you're kind of close to that area.
UVA is 2 hours south Charlottesville, Virginia. They have a really good dumpling place, and they had a really good like they have a really cool downtown area. Um, that's all I remember from Charlottesville.
Yeah, I mean, he would probably. I think he knew most of the colleges in that area, so he would probably
Mhm.
know George Mason. So okay, so now moving on, because I know we're not here to talk about accounting. Yeah. So now you're a real estate investor, and how is that
Mhm.
going for you now?
I mean, it's tough because, when you are working like a regular job, um, you have a specific task that you have to do, and then that's what you're responsible for, right? But then as a real estate investor, you have unlimited number of, not unlimited, but you have thousands of ways to make money in real estate. So, uh, it is tough because there's so many options. How do you know how to stick to which one, right? Are you making the best decision? Um, are you managing things as well as they should be managed? So it is a tough thing, but honestly, I enjoy it because it's just fun to me. And since I'm not tied to a W-2, I mean, earlier today I got to teach my daughter math because we homeschool her.
Yeah. Yeah, I'm not gonna I saw that on your post that like if you're sick of working the W-2, which I assume you mean just like the regular 9 to 5 job
Hmm.
grind, right? Which is what I was doing. I've become like an Amazon Flex driver, and like I just, even though it's like the benefits aren't as good because you don't get all like
Hmm.
the 401k and the health insurance and all that,
Hmm.
like I just enjoy it so much more because I'm free to be able to like to do stuff like this, or you know what I mean? Like I still have to pick up routes, but like I do them like delivery driver routes, um, pretty much when I want. And that's like kind of like, and I have no boss. So that's like probably like the
Yeah.
best thing about it, right? Like you don't have anybody to answer to for the most part. It's just
Yeah.
you.
Hmm.
And so what kind of things do you do in terms of real estate investing? When I think about real estate investing, I would think about like you buying up property and then renting it out, or just mainly that, right? But I'm sure there's other stuff to it too, right?
Yeah, so I've done a lot of different things. I can tell you when I first started, I did this thing called the BRRRR method, which is basically you're buying a distressed property, or not even a distressed property, just a property that could use some updates. You're buying it at a discount and then you're fixing it up. And in my case, I was doing a cash out refi to pay all the money back that I had spent on the house, and then I rent it out. So I was doing that long distance. Did that in Alabama, did that in Tennessee, some in Maryland. Then I switched over to something called land flipping, where you can buy land that someone doesn't want but owns at 25 cents on the dollar, and then you sell it for 75 cents on the dollar. So I did that for a little bit. Um, Turned out my partner and I were not good fits. Not that we don't get along, but our strengths were too complementary. So it was just not going to work out. So I ended up leaving that. We're still friends. I still catch up with him every once in a while. And then I did something called wholesaling. Are you familiar with wholesaling in real estate?
Um, no, I don't think so. No.
Okay, so what wholesaling is you have a property that someone doesn't lives in but might be in some type of bind, right? Some they can't afford the house or whatever. So you come in and say, okay, I will buy your house for $80,000, and then you go in and you sign that contract. So you assign your right to buy that house for $90,000. So you get to keep that $10,000 spread. I was doing that for a little bit, but not what I'm good at, not what I should be doing. So I stopped doing that about a year and a half ago. My mom decided that she wanted to retire. And me being a CPA, understanding that, okay, if you want to spend X amount of dollars every single month, then this is how long your money is going to last. So I ended up taking her money, putting it into what's called a self-directed retirement account, and then uh, made her a lender on properties. So when I was doing the fix and hold model, I was funding a lot of this stuff out of my own pocket. But with her, I'm using her money to be the lender to fund other people's projects, and then she's getting a return on that money every 6 months.
Okay. So, and are you using? It sounds like you are using the accounting and the CPA in this still. Like you're still using the
Yeah,
knowledge or whatever.
yeah, because essentially what it is in most cases when you're borrowing money, that money is being borrowed from somebody else at a lower rate, and then they're charging a higher rate. So understanding interest rates is definitely important.
Yeah. And you said that you were kind of like using your mom's money as opposed to like bank money, right? Is that what you were doing, kind of?
Yeah, so there are three types of lenders out there. So you have your institutions like Wells Fargo, Capital One, right? Citibank. So those are institutional lenders. Then the next tier down are your hard money lenders. So these really specialize in short-term loans, 1 year or less, mainly for investors who are doing fix and flips. Uh, and then you have what's called private money lender, which is what I made turn my mom into. So she's just a regular person that has money, and instead of putting it into the stock market, she uses that to lend on real estate projects.
Yeah. And how much? So I was actually kind of curious. I don't really want to like go too far off the topic of real estate investing, but
Mhm.
um, I was kind of curious, like if I have money and I want to make money with that money, I kind
Mhm.
of like would, I don't know, like I was kind of thinking, is there any way that I can make, like if I like how, what's the best way to make money with money? And I know that most people would probably say investing into the stock
Mhm.
market, right?
Yeah.
But I mean, is there anything else that I could do? Like even with a, I know with a credit card it's hard because like you can't really cash out a credit card without having like high
But you
fees.
can. You
You
can.
can.
Mhm.
So what are some ways, either if because I do have some, not a lot, but I have some money. What are some money ways I can I guess turn money into more money besides, the typical stock investing?
Really good question. So there are several different ways that you can do this. One of the ways would be, uh, earnest money deposits.
No.
Okay, so then when you go and you put an offer on a house, you typically have to put what's called an earnest money deposit, saying that this is my I want to buy this house. This is my deposit to buy this house. So you put in like 1%. And so what you can do is you can be a lender. Wholesalers don't always have the money to cover that earnest money deposit. So you can come in and be an earnest money deposit lender and pay that, pay it for them. So it sits in title. And then once the deal closes, the wholesaler will then give you a fee for lending that money. You're essentially a lending partner. So that's one way that you can do it. Another,
About how much, sorry to cut you off, about how much money do you need to, like, can you give a percentage of the money, or like do you need the full whatever amount it is? You know what I mean?
not, you need the full amount. So it's typically I've done anywhere between $5,000 and $10,000 for well, 5 to 1.5 million. I didn't fund the full 1.5, but there's different ranges depending on the type of deal. So earnest money could be anywhere between 5,000 and 1.5, probably even more than that. But I would say probably minimum of $5,000.
But I mean, if it's 1.5 and you wanted to put in a percentage of that, like where would they get the rest? Did they get it from somebody else, or like would you have to find?
Crowdsourced.
Okay, so you are able to put in a percentage, like you can say,
Yeah.
hey, I have 5,000, and then you would get a cut of that 5,000 back from
Yes.
the interest, right? Okay.
Yeah, you're right. You can put a portion. I don't think many people do on the smaller amounts, but for the larger amounts, it usually gets split up.
You can put a portion, but it has to be, yeah, at least
Yeah.
5,000, right? It can't be like 500 or 1,000.
Well, the minimum for those larger ones, I think, was $50,000, just because the amount of administrative work to get because the thing about it is money never leaves title, but title has to know where that money goes. So there's a lot of paperwork involved to ensure that you as a lender are getting your money back plus your return. So to do like a $1.5 million EMD lend, if you have a bunch of people putting in $5,000, the amount of work to do that is just like crazy, right? Um, but so usually when you have these smaller amounts, it's usually on single family homes that you're lending EMD on, or earnest money
Okay.
deposits. Yeah.
And then what were some of the other ones?
So in wholesaling, there's also something called a double close, where you are essentially buying the property and then selling it on the same day. So like maybe an hour, 2 hours, 5 hours later, that property gets sold. So let's just say I have a house that I have under contract for $80,000 and I'm selling it for $90,000. Someone will come in and lend on the $80,000, and then so the money sits there for like 2 hours, and then the lender gets the money back plus return, and then the uh, wholesaler then gets their fee. So it's called a double close. Um, and then another one is
Well,
private
sorry,
money.
sorry, just
Uh,
like clarify that
sure.
one. What would be the purpose of doing that? If like they're flipping, if they're, I actually don't even really understand that process. But you said like you give the money and then in a day it sells within a day, and then you get the
Yeah.
money back. So what would be kind of like the purpose of giving? Why would they need the money? Yeah, if it only takes like a
Okay.
day, or you know what I mean?
Yeah. So very good question. One of the things is when you wholesale a property, if you're just assigning that the rights to buy that property, the the buyer and the seller both know how much money you as a wholesaler are making. And not everybody wants to show that. So what they'll do is they'll do two separate transactions in one day, so that the wholesaler essentially buys the property from the seller and then sells it to the buyer. So the middleman essentially buys it and then sells it same day. Does that make
Okay,
sense?
so
Yeah.
basically you're kind of like the middleman in that situation.
Yeah, you're always a middleman. It's just whether you want to be transparent about how much you're making on this transaction or not.
Okay,
Yeah.
and then what was the next one?
And then the next one is private money lending. So that is a longer term. You have two different types of private money lending. You can lend short term, 1 year or less. Those are typically for, projects where you're forcing equity through renovations or new construction. Uh, those are typically 1 year or less, and it's a bit riskier depending on who you have as your borrower and how well you've done your due diligence on the borrower. And then you have longer term lends, so 1 year or greater, and those are typically secured against stabilized property, where you're getting a interest only payment every single month for the term, and then at the end of the term, you're getting your lump sum back.
Okay. And then in terms of um let's see. So all these I'm assuming would probably be how much would you need to do all these? Because like in my situation in my situation, like I have
Mhm.
less, you know what I mean? So
Mhm.
would you need like a substantial amount for pretty much all of these?
Not for the EMD. For private money lending, the smallest amount that my team is willing to do is $50,000. But I have found opportunities where it is $30,000, and it's a pretty good it's a pretty good product because you're essentially it's not interest only, it's amortized over 5 years, so your payments are kind of high. And if you're constantly rolling it in, you're essentially doubling your money every 5 years.
Okay. And then um in terms of the you were saying something about the credit card. Or no,
Mhm.
so first question would be I'm sorry. Um
Mhm.
if I wanted to do this, like would I contact somebody like you or like a kind of like a real estate agency or like a title insurance company to do this, or how would I go about doing this?
I would work with someone who has experience because I've seen a lot of people lose a lot of money because one, they don't know how to evaluate the deal. If you can't evaluate the deal, you shouldn't be lending. Two, they don't follow the right procedures. One of the biggest things is if your borrower does not want you to send it to a title company, you don't want to get involved in that. And then three, making sure that the person that is using a company is actually their name is actually on the company documents, and that company those company documents are on the transaction itself. So I would say there's so much to learn from so many different areas. I would definitely work with someone, or at least reach out to someone and ask questions. Don't just start lending.
Somebody like you, like go to you and be like, hey, is this a
Yeah.
good situation? Okay. And then
Mhm.
also when I mentioned the credit cards, getting money from the credit cards to make money, you said there is a way around that. What would that be?
Oh, this is so much fun. So there's a service called Plastic, Plastiq, that treats credit cards. You can essentially use them like bank accounts. So let's just say you have a $40,000 limit on a credit card. You can take that, you plug it into the website, and then you can wire money out of it. You can wire money to put a down payment on a house. I've used a credit card to put a down payment on a house. And you don't have to pay those cash advance fees because that's what kills you. So essentially, if you wanted to, if you had the time and the knowledge and the patience, you could essentially get all these 0% credit cards, right? Pay the fee to wire the money, use it on a lending opportunity, and then once you got paid back, you would then pay back your credit card and keep the remainder. And that's a good way. You're essentially borrowing money at a very cheap rate and then lending it out at a much higher rate.
Okay, so just to clarify that, like this is why I'm bad with accounting, because I think that I'm actually good like with the numbers, but and I know what you just said was very simple to all this is very simple, but for me it's like so just to make it clear, this plastic company, they're kind of like a middleman. So when you get the credit card, if you have like let's just say I have like 5 or 10,000 on the credit card at I guess for the first what 2 or 3 months or whatever, or even a year, it'd be like zero interest. They kind of like allow me to take out money from the credit card. Like they're almost, is that what's going on? The plastic?
Yeah, well, you could take money out even after the 0% term. It's just not good financially. But yes, you can essentially plug it into the website and then use it like a bank account.
And you don't get charged like
You
plastic
get,
allows you to use the credit card as a bank account, basically, like a regular like checking account.
yeah, but there's limits, like you can't pull money into your own bank account, right? You have to use it for something. Yeah, and if it goes to title, even better. But what Plastic will do is they'll charge you a 2.9% fee to pull that money out, and then the rest is just 0%. The
Okay,
rest is
so
just based on the credit card itself.
which would be 0%, but only for like
9 months, 12 months, 18 months, depending.
yeah. And
Yeah.
the plastic company allows you to do this basically turn your credit card into cash. Is plastic like an app or something like that I could use on like an iPhone, or is it like
That's a website.
a web? No app though. Like
They might have an app, but I don't
okay,
know. Yeah.
um, Yeah, and then that way, so if you get it at 2.9% with them, but then you're making more, like you're making, I don't know how much you would make in these situations. You would know, like how much do you make on one of
Yeah.
these deals?
So on EMD, you're typically making 40% return on your money. Um, on the private money lending, the short term stuff, you're looking at anywhere between 8 and 12% flat. So if it's 6 months, and you annualize that return or annualize that rate, it's 16 to 24% annualized.
The
Do you
only
know
thing that
how?
no, I mean, like all this is like even like
Uh-huh.
it's fine, but like even like the simple terms are like kind of like throwing me off. I'm not good with like these types of terms. But I mean, I understand what you're saying, but in term, isn't it kind of sketchy though? Is what if you don't make your money back in time, and the credit card starts charging you their interest, which is 20% or whatever. You know what I mean?
You play the credit card game. So you open up another credit card and then
Oh,
you balance transfer over.
it could get kind of sketchy if you're not good at it though, right? Like you could
Yeah.
like get underwater pretty
Yeah,
quickly.
it is not for anybody who's not responsible with money. You have to know what you're doing because you're playing a game essentially. And you want
Yeah,
to the results could be pretty bad if you're not keeping up with it.
yeah. So back to just like regular, well, yeah, real estate investing. So with your, are you trying to do like kind of like give help and advice to like, are you doing like real estate investing classes or some anything like that?
Yeah, so I'm actually in the process of building a coaching program where I bring you in, I teach you where to find the deals, how to evaluate your borrowers, how to evaluate the deal, what paperwork to use and why, what security documents you should have in place and why. And then I show you live deals, and you can either work with me or you can take the information and go out and do it on your own. Yeah.
And then would you like take a cut off that, or like do you charge like a certain fee or anything? Or
Yeah, so to work with me, we would be splitting the return. But then if you want to go out and do it on your own, it would just be the coaching program fee. It's not set up yet. We do have pricing, like we're working on pricing, but it's not going to be anything crazy. It's really geared towards people that were in the same spot that, or are in the same spot that I was a year ago, 2 years ago. Because I just think about all the money that I've sunk into buying real estate. Had I just done lending instead, like my real estate investing career would be drastically different and a lot more comfortable too.
so you think lending's a better route than real estate investing, or
Not for everyone, right? So the way that I did it was backwards. I went out and my goal was to get out of my W-2 through buying real estate or through real estate. And so I thought if I just go out and buy 30 doors, like I'd be okay. And I'm okay, but there are a lot of challenges to owning 30 properties. And if you don't have a team in place, it's a headache. It's so I would say if you are wanting to get into real estate and your goal is to get out of your W-2,
hmm.
then you should be focused more on active income, either through lending or wholesaling or other ways where you're making income actively. And then once you've gotten to a point where you have to buy property in order to reduce your tax liability, that's when you go out and you buy property. You don't go buy property unless you love your W-2, then go out and buy property. But if your goal is to get out of your W-2, replace your W-2 with active income, and then once your active income is producing a lot of cash for you, then you go out and you buy property.
So as of right now, you said you own 40 doors, meaning 40.
30
Oh,
doors.
sorry,
Yeah.
30.
Mhm.
30. Does that mean 30 homes or 30?
Yeah, so most of them are single family homes. Some of them are duplexes, but mostly single family homes.
Okay, and where are those located?
So I did this not the best way. I have them in Alabama, Tennessee, Maryland, Virginia, and Ohio. If I were to go back and do it all over again, I would pick one market and concentrate in that one market.
Did you do that intentionally on purpose to like kind of spread them out um, for any
The
reason? Or,
No, I mean, there's this thing called shiny object syndrome. I don't know if you've heard of that.
well, I mean, I know from like a layman's
Yeah, it's
term,
just
right? Where
shiny object syndrome.
it just kind of like looks good, so you buy it type thing.
Yeah.
Yeah, like you weren't really worried about where it was. And then where do you live now, if you don't mind me asking, or what area, I guess?
Yeah, I live in Orlando.
Okay. But then,
Yeah.
so do you have to go to these places often to like check up on them? And
I've I've only seen one of my houses in person.
okay, so you're just kind of like trusting that these people are like not like doing anything too crazy to the house or anything?
Yeah, so that's where like evaluating your team, building a team and evaluating the people that you work with is super important, right? So you want to find people that you can trust. Uh, and that just comes from networking and talking to people because there are good people out there.
And so like you work with people who live in those areas and they kind of like check up on them or something or
Yeah, so they have these things called property management companies where their sole job is to manage properties for investment properties for real estate investors.
okay. And then I mean obviously you must have had a lot of money in the first place to buy those places, right? Was that like just from your original job or how did you get the money like in the first place to buy up 30 properties?
Yeah, so the reason why I had money saved up, I also was renting out my basement as well. And during COVID, there was something called the CARES Act, where you could pull out up to $100,000 out of a retirement account, um, penalty free. You still have to pay taxes on it, but essentially you could do that. And so I just went all in. I did that.
Okay. So like COVID for some, yeah, for some people like COVID actually like helps them. You know what I mean? Because like with you,
Mhm.
you were able to do that. Like with I know with like podcasting, like a lot of podcasters like rose up and just people were
Mhm.
watching more podcasts and all that.
Yeah.
Um, so yeah, so in terms of someone like me, someone where it's more like practical to like the everyday listener, like somebody like me, like if I don't really have very much, like me and my girlfriend or my fiance now are in a situation where like we want to buy a home, but for one, now I don't think is the time to buy, right? But then it's everything's so expensive that it's hard for us to do it. What kind of advice would you give to someone like me who's just like we don't have a whole lot of money and but we're saving to get there and also is now like a good I guess when's a good time to buy is now a good time to buy will it be better in the future you know what I mean
Yeah. So it's always a good time to buy real estate, in my opinion. Um, However, it depends on the market, right? It's always market dependent because what market are you in?
like where do I live
Yeah.
I
If
live in I live in uh Inland Empire California so I don't know if you know that area but it's like east of LA kind of like east of Orange County
okay, all
it's kind
right.
of like the cheaper area to live in
Mhm.
Southern California
Yeah. Um, I mean, I always avoid California just because of the rules and regulations, but I
and it's
mean,
so expensive right
and it's very expensive. Yeah. So
yeah
yeah, the price to rent ratio doesn't really line up to what I want to do. I mean, I would say if you don't have a house that you love and you enjoy renting or renting's okay for you now, I would save up as much money as possible, and then I would look for other sources of money as well. So you said that you had a corporate job. If you have old retirement money that you could put into roll into a self-directed retirement account, or your fiance has that, that's a good way to do it as well. Uh, but I would say, I mean, if I had to go back and I was okay renting, then I would take all the money, save it, and then constantly invest it and try to push it off because once you buy a house, when something breaks, you got to pay for it. When you're not making money off of that house, unless you find what's called like a duplex, triplex, or a quad. Do you know what those are?
is it kind of like a condominium type thing where it's like the houses are like connected like there's two houses that are like together or four or whatever
Yeah. So if you can do that, if you can find one of those where it's one house, but it's divided into four different units or two different units, I would go out and I would buy one of those. I would rent out one side and then I would live in the other because you could pretty much live for free. And I think that they have really good uh, lending products like institutions do, where anything that's a fourplex or smaller is treated like a residential property, like a single family home. And so you can I don't know if they still have this, but they were talking about this a year or two ago, where you could factor in the market rent for each of those units into your affordability, so that you could rent out. So then that would increase your the type of house that you can buy. I think they have options where you could put zero or no money, like little money down, 5% down, something like that, where you could essentially get into a house where just the closing costs, and then rent out all the other sides, and essentially have your renters pay your mortgage for you. That's what I would do.
Unfortunately, I feel like we're in a situation where we can't even do that. You know what I mean? I actually worked just random. Have you heard of Loan Depot by any chance? Yeah,
Yeah.
I actually worked with them
hmm
for when you brought for some reason I just like remembered that I was like a sales junior mortgage banker, so I was the person calling the people and then trying to get them to sign up or whatever,
Yeah.
and or to get a loan. Um,
hmm
that's kind of just a random subject, but so I learned some. I just remembered I learned some stuff about some of this terminology from that. But my like my girlfriend, my fiance has a good amount in her 401k, and so I'm kind of like I was like maybe we could use that to buy a home. What do you think about taking out the 401k to buy a home, or do you think the 401k is better just to leave in there for retirement?
No, I don't like those things, because you're essentially, retirement age is not guaranteed. Whatever the, like, 59 is not guaranteed. There's no guarantee you're gonna make it to that long, right? To that age, unfortunately. If you can, so I would only do that if you were to take that 401k money and put it against one of these multi-unit properties. Because if you can make money off of the house that you live in, I mean, you're living for free. It's just, it's a huge, to me, it's a huge advantage financially if you can do that.
So you would say to do that, to take out the 401k and buy one of these duplexes and then rent out the other side?
Yeah.
Okay. Yeah, I mean that would have to be up to her, but she's the one who has she's doing
Mhm.
pretty good with it. I'm not because I don't even have like a 401k with my job currently, with the driver job. But in general, what do you think? You don't really like 401ks in general because you don't know if you're gonna make it that long, basically.
Yeah, I mean, why would I put my money into something where the only benefit is I get to save on taxes? Like my dad, he's got to pay taxes on the money he takes out of his retirement account now. So like, what the hell's the point? So I'd much rather just take that money, whatever I was putting in 401k, I'd rather just put into real estate in one way or another. And then if I want to enjoy it today, I can. And if I want to enjoy it when I'm 59, I can.
Yeah. And then is there anything on like the smaller scale in terms of what we were talking about with investing money? Like I was kind of thinking like what if they came out with like an a lending process, like an app that like kind of like takes other people's money
Mhm.
and then invests it. Is there anything like that? Like where I can like give $500 and they give me like a piece of that or whatever. Do you know what I'm talking about?
Yeah, there was something called, I think it was Peer Street. They folded.
It didn't work out.
They went bankrupt because, I mean, I don't really know why, but I mean, one of the things that I look at when I'm a lender is the borrower. Every deal, whether it's a good deal or not, it's going to go, one of them is going to go south. It, how good is my borrower? Is the borrower going to live up to their word and make sure I get paid back? Or are they just going to say, throw their hands up and say, all right, well, didn't work out, and then I lose out on my money or my friend's money or my family's money, right? So for me, I don't really like those, unless, because I just don't know who's borrowing the money. Um, and so I don't know if those are available, but I mean, there are loans that you can do. I mean, there's different ways to do it. Honestly, I would focus, in your situation, I would focus on finding up to a fourplex and doing that. Talk to your lenders. Talk to many different lenders and ask, do you have this product where I can buy a quadplex and with the least amount of money down? Like, what options do you have? Because it's out there and you're paying. If you can do that, like, that's the best way to make money. So one, you're not paying rent, someone's paying you rent, you get experience. I mean, I think there's like no lose there.
Well, the problem with this kind of thing though is it would take a lot of money for us to do this, and like, what if we just don't have the money to buy one of those places? You know what I mean? I don't know how much
Uh,
those places you're talking about are, and
uh
it's like we probably have to. I would assume, like honestly, at this point, we'd have to move out of California to even do that. I mean, how much are those places? You're talking about duplexes or
yeah. So again, talk to them because they may offer. So if you have a fourplex, right? And you tell them, I'm going to rent out the other three units. They will, I think, from what I've heard of those products, because I haven't dug too deep into it, they will use the market rents for those units to help you with your affordability. And if you're only paying, if they have those zero down or 5% down options for you, it reduces the cost to get in.
but I mean, how much would it still be?
It depends on the market, right? So,
Yeah.
I mean, we have houses in Cleveland that are like $75,000. Then you go to the houses that my buddies make building in Vienna, it's like $3 million. Like it really depends on the market.
Well, that's kind of like what I'm saying. Like where we're at,
Hmm.
nothing is cheap. Like even in the area we're at, it's a cheaper area of Southern California, and
Hmm.
it's still like we're looking at like the area where I live in. The houses near me are well, the
Yeah.
houses. I don't know if what you're talking about, the quadplexes or whatever. I don't even really know. I can't even think of like where those would even be. I can't. Um, I know what you're
So
talking about, but I don't know
yeah.
where they are. But the houses near us, and they're just like regular houses, are like 500, $600,000, and it's just like there's just no way that we can afford that. Like we could probably afford, like you said, $75,000 in Cleveland
Mhm.
or wherever, but not where we're at. So I mean, we would literally have to like move. You know what I mean?
Yeah. What city are you in again?
The city is called Beaumont, and Beaumont isn't like a lot of people are actually moving to Beaumont, but it's not like a very it's not a high end area by any means. It's not somewhere where people would like really want to live. It's not bad, but it's not like, Orange County. Like, um,
Okay.
so if
Let me
you
see.
look at, I don't know if you're able to find like, what are they called? Quadplexes or duplexes?
They
Triplex?
are, yeah, so quadplex is 4 units, triplex is three, duplex is two. Beaumont, California homes. So basically you just go to Zillow and then you under home type, you select multifamily. And then, oh, okay, so we have a multifamily for $339,000, but there's no information on it. But it's two bathrooms, right? Rare investment opportunity. 2 units. So that's a duplex right there for $339,000. So if you could find a product that has 5% down, right? 800 times 105, you would need $17,000 for the down payment plus closing costs. I don't know what they are in California, but like that's an option, right? And if you're okay going outside of Beaumont, there are like in Banning. I don't know if you want to go to Banning. There's a 250.
That's like literally right next to us. That's like the next
Oh,
city over. Yeah.
okay. So Banning, this one is 250, single story duplex fence yard fixer upper. I mean, that's you could get in there, you could fix it up yourself, force the appreciation, right? By making it nice. It's been on the market for 210 days. Like that's an option. So 5% of 250 was a 12,500 plus um plus closing costs. I mean, that's something you can do. It's one
So
bed.
a lot of these, do some of these places maybe are some of these places duplexes that I see, but like maybe I just don't even know they're a duplex. Like it looks like a regular house, but it's like separated or something. But
Yeah.
I can't even think of like where I've even seen like a duplex. I like maybe I just don't notice that that's what it is. You know what I mean?
Yeah. Now that you
Or
know what
actually, you
they
know what?
are,
I think that I actually have delivered to them now that I think about it. But I think that I'm not aware of the different. I guess I'm just like not aware that they're duplexes or whatever. But
yeah. So it's essentially one building with two front doors.
okay, yeah, I mean, yeah, I've definitely been to those places. I think that I'm just like haven't really paid attention enough to
Hmm.
know that that's what it is. But um, in terms of like you were saying, it's always a good time to buy, and but in when people say like now is not a good time to buy or now is that basically just based off of the fact that the houses are more money and the interest rates are also higher right now, right?
Yeah.
Um, is that basically you want to buy when the interest rates are low and the houses prices are low, and then you don't want to buy when they're high and the interest rates are high? Is that normally how
It
it works? I mean, that's
it
kind of
de-
obvious, but is there more to it than that?
yeah, I mean it really depends on the exit strategy that you want that you're going for, right? So if your goal is to buy the house as a rental property and you're not planning to sell that house for 5, 10 years, you're gonna rent it out as long as the cash flows, meaning the rent pays for expenses plus property management plus putting away 20% for savings, then buy it. Even if you think you're at the top of the market, because you're only going to lose money if you sell that property, right? If it tanks 20%, then you only lose if you sell that property because rents aren't going to go down, right? But if your goal is to do short term, then you got to figure out, okay, well, if it's a downturn and the market tanks 20%, is there enough room so I can still make money or get my money back if I were to do a fix and flip on this property? Can I get out soon enough? Um, so when I say it's always a good time to buy property, you're never going to time the market, right? Um, there's a housing shortage in the US. You have hedge funds, you have investors coming out and scooping up all these properties, driving the prices up. So, I mean, do you want to be one of them? Or you know what I mean?
Yeah, I'm just wondering like what people mean in general when they say that. Like when they say, I mean, it's just kind of like the obvious. If the I know that you believe that like it's always a good time to buy, but like when people
Mhm.
say that, is it mainly just based off of the interest rates and the
Oh,
prices of the homes being high?
uh, well, I think it comes from when you hold on to property, when you buy property, you are leveraging the bank's money to get into a larger asset. If you're renting it out, you have someone else paying your mortgage for you. You get tax benefits from owning property, and you get appreciation. So, um, I mean, I think the saying of you it's always a good time to buy real estate is not to, if you're ready to go, don't wait and sit on the sidelines hoping for a better market because it's really impossible. Because we didn't know, right, by that interest rates were going to jump up as fast as they did a couple of years ago, right? And then we expected rates to come down sooner, right? Um, so my answer is still whether interest rates are high or low is just always buy if you can. Uh, I know it's probably not the best answer to your question.
No matter what, like even if I'm like, you know what, like, I think, but I think the point is that you're trying to make is that like you just don't know what's going to happen in the future. So it's like things could get better, or they could get worse. So you might as well just buy now as opposed to like waiting a year.
Yeah. If you can
But
afford it and the numbers make sense, then yes, buy.
what I kind of am wondering is why is everything so why are the interest rates what makes the interest rates go up and down? And then
Mhm.
also why is everything so expensive right now? Like I don't really feel like we've gotten like a good answer on inflation
Oh,
and stuff like that.
got it.
Um,
Yeah.
I mean
Okay.
that's not what I was asking before, but I'm just curious
Mhm.
about that too. You know what I mean?
Sure. So when interest rates are low, borrowing increases. When borrowing increases, like more people are borrowing money, that increases the amount of money out there. So it reduces the value of each dollar, right? So then what they're trying to do is when they increase interest rates, they're trying to make people not borrow as much money to reduce the amount of money supply in the system.
Okay.
Does that make
And
sense?
yeah, yeah. And who does that? Is it the Fed that does that, or
I'm pretty sure it's the Fed, but yeah, they're not even a government organization though, but somehow they control it. Yes.
what is the Fed then? If I just kind of assume it was like the federal government or something, but what is it?
No, I honestly don't know. All I know is that they're not part of the government and they are the ones that dictate what the interest rates are, and their goal is to keep inflation at a certain rate. So if inflation's high, then they raise rates, and if it's low, then I don't even know if it's ever been low, but they reduce the rates. Like if the economy is slowing, they play a game essentially. Like everyone's just playing a game.
Like they're trying to control the inflation by, or just, yeah, right.
Yeah, they're trying
And
to
then
control a lot of things. Yeah.
why do you think the inflation in general, not only with houses and interest rates, why is it so high right now? I think a lot of people have said like is it COVID or whatever, but like, do we even know why everything's so expensive right now?
Yeah, because when you're lending money out at 2 to 3%, that is below the inflation rate. So let's just say you're borrowing money at 3%, but the inflation rate is at 4%. That means it's actually better for you to borrow money because the rate of your loan is not keeping up with inflation. That means the dollar that you've borrowed is now worth less today than it was yesterday. And so whether inflation goes up or down, if you have a rate that's below the inflation, they're essentially giving you free money. They're paying you to borrow money.
But I mean, it must be. Is that why everything? I mean, I'm talking not only houses, but like groceries and gas and like, do we
Yeah.
know why everything is so high? Like, but some people have said like COVID made things
So
high. Like, I don't really know what
yes.
else, but
So it's a mixture of a lot of things, right? You have cheap money, and then you have quote unquote supply chain issues where countries shut down, so supplies are hard to come by. So that means, let's just say everybody needs to go out and buy a door. You have 1,000 people that need to go buy a door, but you only have 500 doors. People are going to pay more for that door because there's more demand than supply. So it's like basic economics, right? Supply and demand. Um, if we're not able to get the supplies that we need, everything becomes more expensive. Plus, the government was giving away a bunch of money, and so a lot of people were going out and they were buying uh, TVs, right? But then some people were also taking it and dumping it into the stock market, which artificially rose stock market prices. So I just got to say first, I'm not an economist. I'm just going based off of what I've heard and what I've done light research on. Uh, but that's just what I, have heard and my uninformed opinion, essentially.
yeah.
But yeah, again, like the biggest thing is borrowing money. The cheaper the rates are, the more incentive people have to go out and borrow money. Like right now, I'm selling houses, and my houses have interest rates of 3 and 4% on them, but you can't go out and buy a house with 6%. So that makes my house more valuable because if I sell the house with the debt in place and they don't have to replace it with something else, it it's cheaper money essentially.
So you're actually saying it's good to borrow money then? Like you should
Um,
be borrowing money, right?
you should be borrowing money, but not to buy cars and TVs and things that don't hold their value. If you're going to go out and you're going to borrow money, you better be using that to either buy assets that appreciate or lend it out or do something, but in a safe manner, right? Make sure you know what you're doing because you can borrow money and you can get yourself in a lot of trouble if you don't do it properly. So what I'm saying is if you're going to borrow money, you should be doing it to make money and not to buy the new iPhone or a car or whatever else.
Okay. And then in terms of like your day to day, how hectic or stressful is your job? Like, are you kind of just chilling with these 30 properties, or like is there a lot of stuff that you still have to do on a day-to-day
I
basis
wish
to maintain them?
I wish I was chilling. So my day starts at 4 o'clock in the morning.
Ugh.
Uh, yeah, I wake up, but see, I go to sleep at like 9, so it's not that bad, right? So I wake up at 4, and then I I meditate. I'm just meditating is super difficult for me, but I'm trying to get into it. So I do that, and then I start working on the things. I start answering emails, respond to messages, send messages to my team, say like, can we please get these things done? Then I go into my social media, respond to those things. I try to post content because that's just a marketing tool now. Like social media is just a marketing tool. And then I start working on my coaching program to make sure I have everything that I want in there. And then My kids wake up, my wife wakes up, I hang out with them, have breakfast with them, make them breakfast and all that. And then I start my day with essentially back-to-back networking calls from 9 o'clock all the way until 4 o'clock. And then I try to hang out with my wife and kids if I don't have anything urgent, and then do it all over again.
And then like the networking calls, would those kind of be like what kind of things would those be? Just kind of like calling people to network, obviously, but like what for?
So the biggest thing is like I have a need, right? I have deals that I have. So it really depends on what it is that I'm looking for. So if I'm low on deals, I have too many lending partners, but not enough deals, I'll go out and I'll start reaching out to people saying, "Hey, I got money. I need to lend it out. What do you have?" And then I'll start getting on calls with people. And then right now I'm at a point where I have too many deals, not enough money. Then, okay, so now my focus is finding more people that want to get involved, that want to lend their money to make more money, right? And then always looking for new opportunities. Like I want to go on, I want to raise capital for a team that's doing cool things. So I go out and I say, hey, I got this skill. These are my strengths. What's everyone working on? And then you go on those calls and you start talking to people to see how we can collaborate and work together. Um, Networking is a huge part of anything that you do, in my opinion, and I see that now because so many more opportunities come through. And even if you're like foggy, you're not sure what is that you should be doing or what you want to do, just talking to somebody will help you gain clarity.
Yeah. And so, do you play poker by any chance?
I used to, but I was terrible at it.
Oh yeah. I was just curious. It's just kind of like a random question, but
Uh-huh.
how do you feel about how do you feel about poker as a way to make money? Do you think that's like a good way to make money or not really?
I think anything's a good way to make money as long as you put all of your effort and attention into improving your skills. So in poker, like understanding the probability of your opponents having a better hand, understanding, okay, having a better way to recall past, right? Re Essentially gather data and then use all the data that you've gathered to then make an informed decision. Uh, I mean, anything really is a good way to make money as long as you are putting everything you have into that craft.
Yeah. Do you watch poker by any chance?
I during the big poker craze, I did, yeah.
Yeah. Well, now there's this is kind of like a random aside, but there's a show now called Hustler Casino Live. Have you heard of it? And like in no way am I bringing this up to like try and like disparage real estate investing, but there's a
Uh-huh.
guy on it named Nick Vertucci. It's a popular YouTube poker show.
Hmm.
And for whatever reason, it just reminded me of this. But like, there's this guy who was an owner on the show, who had like a real estate investing like class, but like
Hmm.
people were saying that he was like kind of like a scammer or whatever. And then it
Yeah.
came out later on that he was like he was like coming on to women and stuff like that. So they ended up like kicking him off. But
Hmm.
for whatever
Yeah.
reason, I just randomly thought that like you might know of that situation. I follow poker a lot, so I just wanted to see if you had heard about that. But
No, but I'm glad you brought that up because that's an important thing too. You have to be careful. So when
yeah,
you go and you reach out to anybody for anything, you have to know exactly who they are and what they do and what their intentions are. Because there's a lot of people that I've met in real estate that have encountered bad coaches, bad mentors that take advantage of their students financially, right? And it sucks. Like people are reaching out to you for help and you're going to take advantage of them. Like what kind of person is that? So I'm glad you brought that up because not every coach, not every person is a good person in any industry. So I'm really glad you brought that up.
yeah, and like I didn't want to bring it up to like disparage real estate investing.
Uh,
I just thought it was I thought you might have heard of it, and I thought it was a funny story. But yeah, you're right, and I honestly don't even know what the situation was with the real estate investing. I just heard from people like online that like he was kind of like a scammer, but then it came out that he was hitting on women or whatever, and he got booted off the show, and now I'm just like, man, I have no clue what this guy's gonna do now. I mean, I couldn't imagine being in that situation, you know. But
Yeah.
yeah. So moving forward, how do you think things are looking in terms of the economy and real estate investing? I mean, I know that some people think that like Trump's gonna do good for the economies, depending on
Mhm.
how you look at it or whatever. What do you think is going to happen? I've also heard that like cryptos kind of like on the rise and going to be used,
Mhm.
maybe even become like legitimate, right? Because like Elon
Mhm.
Musk
Yeah.
is like pushing it or whatever. What
Yeah.
do you think about the future of just all of it? I guess the economy and real estate investing and
Yeah, so really good questions. I must tell you that I'm not informed. All the things that you've said about crypto, like I have heard just from friends. And I mean, I think no matter who is in office, there's always going to be good things that happen for the economy and bad things that happen to the economy. I think Trump would probably lean more towards my world. Uh, so in terms of like real estate investing. Um, and business, right? Uh, but a couple things that I like about his team are RFK, and I know this is like off topic, but I'll just answer your question. Essentially,
no, that's fine if you want to go off topic.
well, I was gonna say for the economy, I think that no matter what, there's always a way to make money in any economy. So my main concern is, okay, well, what's gonna happen next? What rules and regulations is he gonna move or remove, or implement or remove, and just go based off of that. Um, yeah, but I guess to answer your question, I think he's gonna be more on the side of the investor than and the business owner than anybody else.
Yeah. So you think things are going to get better? I don't know about the inflation. Like I kind of feel like the inflation might I don't know. I mean, it might just be like too hard to like control. You know what I mean? I don't know if we're going to be able to solve that problem. Then I also have heard that like I don't think you said you don't know too much about crypto, but I've heard that like with Bitcoin, like there's only like a certain amount or something, so like there
Mhm.
there will be no inflation. Like, do you know
Mhm.
anything about like do you feel like crypto would be a good way to go for eventually for money? Um,
From what I've heard, it seems like that's a more stable asset than currency. So having crypto be, I guess having a country's currency backed by crypto, I think is, I mean, if it's essentially like gold, but there's only a finite amount of it, I think it's good because right now, I mean, if the US wants to pay for something and they don't have the money, they just print more money. Um,
yeah,
so having currency backed by an actual asset, whether that's virtual or physical, I think is a good thing as long as it cannot be replicated uh, and what's it called? Counterfeited, which I've heard like Bitcoin can't. Like you can't make fake Bitcoin. So I think it's a good thing.
yeah. The thing that's like kind of comes off a little bit to me, I don't really know enough about it, but it kind of comes off as a little bit the whole field kind of comes off as a little bit the crypto field just comes off as like shady to me because there's been
Hmm.
so many scams and stuff that it's
Yeah.
like if they did it they would have to make sure that they did it right, so like
Yeah.
there's no rug pulls and all that kind of stuff.
Yeah, and but you see, like there's scams in crypto, there's scams in real estate, there's scams in like accounting, right? Um, One of the big things that we learned during in college was the whole Enron scandal. Like, there's always going to be scammers. Like, how do you protect yourself?
Yeah, in terms of investing in it, do you have any advice on that, or like do you invest in crypto at all or no?
Yeah, I mean, for me, if you understand crypto, then invest in it. If it's something that you're heavy into, then invest in it. But if you don't understand it, you don't know it, you don't know how to evaluate it, then I would not. If you don't know anything about crypto, you just know that it exists and you're gonna invest your money in there, just be willing to lose that money.
Yeah. Okay, and then in terms of any other like kind of like I asked in the beginning, making money with money or just money hacks in general, I guess. Like
Mhm.
I think that everybody like I've always kind of been like wondered like why is even in America? I mean, it's not that hard. Like if you go and get like a regular job to make money in America,
Mhm.
but um, it still seems like it's hard. It's always hard to get money. You know what I mean? Like it's especially a lot of money. And what like there's no real easy way to get it. You know what I mean? And it's kind of like, is that just because it's so competitive or like, you know what I mean? And like, is there any good I guess like money hacks or even life hacks that you could give to somebody
Yeah,
just to kind of like make money and keep
yeah.
money?
Yeah, so I would say the biggest life hack that I've seen is if you don't have money, um, it doesn't mean there's money is not out there. You just have to figure out how to access that money, whether that's building relationships with people that have money, or yeah, or building a product and selling it or something, right? Whether that's a coaching program or software or whatever it is that your area of expertise is. If you can do that, then you get access and people are willing to give you money for it. Providing value is the biggest thing to access more money, right? So when I say go out and find someone who's rich or wealthy, um, you don't go up to them and say, "Hey, can I borrow X amount of dollars for this business idea?" Right? You find out what it is that they're doing, and your question to them is, "What task or these are my strengths. These are how I can help you. Do you have a need for it?" Right? And they'll either say yes or no. And if they say no, say no problem. Check back in a week. Check back in a month. Over and over and over until they say, "Well, you know what? I don't have anything for your particular skill set, but I like your follow up. I like your persistence. I have this. Are you interested in this, doing this for me?" And then that's how you build that relationship. It's money is essentially you have to bring value to money and then the money will come. If that makes sense.
Yeah, it does. Like I was doing like I'm doing you I do social media too, and I'm was doing like Instagram posts and YouTube stuff, and it was just kind of like art or nature videos or whatever filming.
Hmm.
But then I started using like AI to create informative videos, kind of like what you're saying. And I think that it does better because you're actually giving people information, like they're learning
Yeah.
from the videos that I'm using.
Yeah.
And yeah, but like just like posting, I mean, obviously you can make money with art too, but like when you're just posting like random videos of art, it's not as good of a way as to actually give people value, like you're saying. But like in terms
Mhm.
of like AI and stuff like that, what do you feel like the future is with AI? I mean, it sounds like it's going to be pretty disruptive within the next 5 to 10 years. I mean, do you think it's going to be completely different with everything with AI and or
Yeah. I mean, absolutely. So a lot of jobs are going to disappear, unfortunately, because I mean, right now I have a virtual assistant who helps me. She doesn't know anything, and it's like not a not against her. It's just she's not interested in this, right? She's more task based. She likes just doing tasks. So I mean, all I do is she doesn't have to know anything about any of the stuff that we talk about. She just downloads a transcript from Zoom, drops it into ChatGPT, and says, "Create SEO optimized YouTube video description." And then it all populates for her. She just copies and pastes it, drops it in, and then uploads it to YouTube. I mean, you used to have to come up with that whole thing yourself. You just have a copywriter, right? Someone who's good with language, good at creating something that um, good knows understand SEO optimization, like all these different things. Now you can just have anybody do it because you have AI. So yeah, it's gonna be it's a huge disruption. And I mean, my consulting job was going to disappear. It is going to disappear at some point. Um, I mean, a lot of jobs are going to disappear.
yeah, what virtual assistant do you use?
Um, so she's a girl from the Philippines.
Oh, so she's like a real.
Yeah.
I was
Mhm.
for some reason thinking like a virtual AI type thing or whatever. But you have
No.
somebody who's actually doing that. But yeah,
Yeah, so she's I mean doesn't know much about real estate other than what I've taught her for the past I haven't even taught her much because she doesn't care to learn. But she takes care of a lot of things for me because she can leverage. I figure out how to use AI. I figure out how to use these different tools. I show her how to do it, and then she does it, and then that's it.
Yeah. So is there anything else you wanted to go over in terms of that I missed in terms of real estate investing? Just because I know nothing about it. I just wanted to make sure I didn't like miss anything covering what you wanted to go over. I know I went off on some tangents, but I
No, that's
figured
cool.
I just figured you know a lot about like, different areas of money and all that. And yeah.
Y- Yeah, so I would say, I mean, we didn't really miss this, but my biggest thing is before you go out and start taking action and going out and lending or buying property or whatever, talk to someone who's done it, learn from them, try to avoid as many mistakes as possible. You want to, the money that you worked for, it was hard to get there. So try to preserve it, protect it as much as you can. Talk to experts, talk to people that are doing what it is that you want to do in the area that you want to do it, um, so that you keep your money safe.
Yeah, okay. And do you do any like real like realty, I guess it would be called?
No,
No.
no. I didn't want to study. I didn't want to sit for the test, and then I mean, realtors have it hard. I mean, it's a hard job.
You think your job is better or easier than being a realtor,
It's more
doing what you're doing?
flexible. Yeah, because I don't have to
Yeah.
go because most of the time you got to go show houses on the weekends. You got open houses. You have to follow with people. I want to hang out with my kids and do stuff with them. I don't want to go show a house.
Yeah.
Yeah.
And then in terms of real estate investing, where do you feel like some of the best places would be to invest? Like, are there certain areas right
Yeah.
now?
So if you're looking for lower entry, higher cash flow, I would look at the Midwest. So Ohio, St. Louis, Indiana, um, Arkansas, like those areas, Oklahoma. But if you're looking for more like appreciation where the houses are going to increase in value, I would go along the coast. Um, like my old market, the DC metro area, very expensive, but house prices go up pretty fast. LA, same thing, right? So it really depends on what it is that you're looking for. So cash flow, interior of the country, for appreciation, the coast.
Okay. And then in terms of, do you do any investing too in like the stock market type stuff?
No, because I don't keep up with it. So I don't, I mean, I used
Okay.
to, but my biggest thing was like when right before everything shut down in COVID, for COVID, I pulled all my money out, and then instead of everything tanking like it should be because everything shut down and no one's making any money, everything went up. So I got out of stock market.
Okay, cool. So where can we find like so you have a YouTube channel, you have a podcast. Do you also have like your educational courses on there? Is that all done through the podcast?
So right now, all the education that I do, it's free and it's through YouTube. I essentially just have people come on and talk about their situations, what they're going through, what they've gone through. I do have some videos that I give to my lending partners, but at some point I will be launching some sort of coaching program. But if people want to reach out to me, just ask me questions or just to I don't know, connect. You can find me on Instagram. That's probably the best way. It's JONCHANREI. Um, and then there it has all the links to everything else that I have.
So everything is on Instagram. That's the best way to find everything.
Yeah, so in my profile they have like a link tree, and so in the link tree they have all my other socials and YouTube channel, and I got on Spotify and Apple Podcasts. I haven't put those links up there yet, but I mean if you go to YouTube, it's the same thing.
Okay, and then what's your podcast called?
It's the Road to One.
Okay, and is it just it's just you interviewing other people, right?
Yeah, so it started off as interviewing real estate friends, but now it's kind of turned into like entrepreneurs as well because it's all very similar.
Okay, and then lastly, I always ask, is there any like music, movies, podcasts that you're into I guess regarding this subject or anything at all is fine. I just like to like I'm always looking for stuff to listen to or watch. So I always
Yeah.
ask this question.
So not really movies or podcasts. I've really gotten into audiobooks starting 4 years ago. Audiobooks have really changed my life because if I try to read, like I won't remember anything and I'll probably fall asleep halfway through the first page. So audiobooks I think are amazing, like Atomic Habits, Chop Wood, Carry Water, Emotional Intelligence, um, Extreme Ownership, Mindset. I mean, there's like, if you reach out to me, I'll give you a list. I got like 150 books that I've gone through in 4 years. Um, I can give you some, tell me what you're going through and I'll give you a book for it.
All right, cool. Thanks for coming on, John. And I'll let you know when the podcast is up. And thanks for listening, guys.
Sounds good. Appreciate you having me. Thank you.
Yeah. Okay, bye.